Is this the mother of all crashes? Is it time to short China? How do you short Chinese stocks that trade on the United States stock exchanges? Hang on. This is not financial nor professional advice. This video is for entertainment only. What's remarkable about this crash is everything seems to be crashing. The stock markets are all down for the third week in a row. Commodities are down. Crypto is down. Real estate is going down. Everything is related to each other, and it's all going down, and it's happening worldwide, especially in China. In China, property values have crashed 46%. Property is going to tend to go down in this country too, although I expect it to be less severe. It'll probably be about 20%. And I'm using a triple leverage inverse fund. It's DRV. For every dollar the real estate index goes down, you get $3. So you make money on shorting real estate, essentially. So with DRV, if property values go down about 20%, you make 60%, which should be a nice sum to have in the middle of a crash. Jeremy Grantham has done an analysis of all the major stock market crashes, and he's noticed that there's always bear market rallies, and they can be intense and can take you up 30% each time, possibly. And right now, in terms of major rallies off the market low, we are in the beginning of the third rally. And this is usually when it takes its big swoosh downwards. So I think that's how I played with SQQQ, which is shorting the 100 largest companies on the NASDAQ. Basically, a bear market is a short-term trading model for the traders, simply because you're forced to, because you have these intense bear rallies, and they are brief usually, although they can sometimes last for months. Lately, they've been brief. We've had like 7 sort of rallies since the market low, where the market tried to recover, but 3 times where it did it seriously. These rallies, the reason I've been successful playing them is each time they rally, they tend to go up 6 to 8%. And if you triple leverage that, you're making 18 to 24%, and you can do that in a day. And so that's why you become a short-term trader. And I only become a short-term trader during a crash in a bear market. Michael Burry got famous calling the 2008 market crash. And there was a movie made about it called The Big Short. So he's very famous in that way. And he's predicting that the market could go down another 53% from where it is now. So wow, that is really bearish. I think it's going to go below 3,600, I think, in my mind. I think 3,200, let's put it this way. There's an 80% chance of it going down to 3,600. There's a 60% chance of it going down to 3,200. And I think there's about a 50% chance it could go to 2,800. Right now, we're hanging up above 3,900 on the S&P 500. And if that goes below 3,900 and starts trending down, I think that's the beginning of the swoosh. Just the action has been so negative on this market. Friday, it started off positive, and then it turned right around and went negative. And that's before Labor Day. The idea was, people wanted to take their profits and go home. No, at the end, people want to avoid taking losses before they left the market for Labor Day. So people are getting out of the market. And right now, the action is all being driven by the shorts. It's all whether the shorts are buying, which sends stocks down, or they're selling. They say, "Oh, I've gotten enough out of this. I'm getting out." And that's why it's a daily game with this, and with the Chinese shorting the Chinese stocks that are on the United States stock exchanges. I see that more as a long-term thing. That has a long ways to go, and it seems more certain, at least in my mind, and in many others' minds. I've noticed on YouTube, people have started to take notice that Yang, Yang, the triple leverage inverse fund on Chinese companies on the United States stocks exchanges, is starting to move upwards. And I was in CHAD, CHAD, but that only gave you 1-for-1. As the index went down $1, you made $1. Yang, Yang, you make $3 for every dollar the Chinese companies trading on the United States stock exchanges goes down. Michael Burry says that we are entering the mother of all crashes. And Jeremy Grantham says that we are entering the final act of the super bubble. Things just do not look good for China. China's real estate housing has fallen 11 months in a row. Property values are down 46%. Their unemployment rate is 5.5%, which would be high for us, but is astronomically high for China. The amount of debt they're creating now consumes 90% of their gross domestic product, their GDP. We've had this myth that China is going to be the next superpower, or is the other superpower, but I think we're going to see that fade. And I speak from my experience of the 1980s. In the 1980s, later part of the 70s and into the 80s, Japan was going to take over the world. At one point, the land under the emperor's house was worth more than the state of California's property. Unbelievable, but that's how ridiculous things got. And ever since, Japan has been just floundering. They've recovered, and you could still play the stock market there because, of course, they went through the crash, and then you could trade your way up, which is my argument for doing reasonable trading. But I don't think the United States is anywhere near the bad situation that China is in. I don't see us in decline. I still see us in ascendancy. The rest of the world is literally looking to us to protect us from countries that want to take over other countries. The United States has not had designs of going into a war to take over that country and rule that country. That should have been left back in the medieval times. So I think that's why the world looks to the United States to preserve freedom. You would think China had enough problems, and they're exacerbating it with all these lockdowns, which are affecting the world. They also they see themselves as trying to stimulate the economy, which of course makes inflation worse. But there's also another factor. Half the country is in a severe drought, which is going to affect food prices, but it's also going to affect their manufacturing because they get a lot of their power from hydroelectric sources. And when the water in the dam isn't high enough to charge, to provide hydroelectric power, you're in real trouble. And electricity becomes more expensive, which drives up your manufacturing costs, which adds to inflation. And also, the United States going into a recession, we're already in a recession. It's been proven. We had the GDP turn negative for the last 2 quarters. what that does is it makes us less of a buyer of their products. Okay, so they're going to have less income coming in from the United States, and so that will worsen their recession. Thanks for listening and watching. Be sure to hit the like button and subscribe if you haven't already done that. I'm going to put a cartoon at the end of these videos to try to break things up a little bit, because I know it's sounding grim and I don't enjoy sounding grim, but you might as well try to make some money in this crash. You're actually fighting inflation by going short on the market, especially with China. I feel a lot better shorting Chinese stocks than shorting United States stocks. I do think we have another bit to go. Probably 20% is kind of my thought. 10% for sure. So you might as well build up your cash pile so you can pile back in to the market when we return to normal. If the shorting is too much of a thing, you're probably ahead to put your money in a money market. The interest rates are going up, so you will finally get something back. But you might as well just hang out and take it safe if you're not comfortable with shorting, because I don't think it's for everyone. I've gotten used to it, and pretty much it's been what's been successful in this shorting year. This year will always go down in my mind as the year of shorting, and I do it the easy way with these inverse funds where they're literally no work. You don't have to do anything. You buy the fund and you sell the fund. That's it. So thanks a lot, and good luck to us all.